Good afternoon, Chris. Thank you very much for joining us.
Good afternoon, Dan. Thanks for the invitation.
So how about we just start with a brief introduction to yourself and, of course, Insch Capital.
Insch Capital is based in Lugano in Switzerland. We are a systematic, technical, trend-following system in the currency markets. We trade FX spot. Now,
you've just come fresh off the Battle of the Platforms debate, debated between single or multi mostly. And first of all, what were the key takeaways from the punch pulling?
Well, the most obvious thing I learned was that the other panelists knew a lot more about the subject than I did. But it was very, very interesting nonetheless, the way that the industry has grown from when we first started in this business back in 1991 as a pure currency manager. It's changed enormously.
How so?
Well, technology. If you think back in 1991, there simply was not the internet, there were no emails, nothing like that. It was all done via telephone. And as I mentioned in the panel, we got the price literally by calling Sid in London, and Sid gave us the mid-range prices on the crosses we traded. They were fed into the system, the signals were generated, and the trades were made again by telephone. It's changed enormously since those days.
And now, what systems are you using? Are you preferring the single or multi-dealer?
Well, it depends on the client. Certain clients will insist that you use a certain bank platform, which might be a single provider, and others would want to use a multi-bank platform. From our point of view, it's very much something we don't want to get in the middle of. The owner of the money, that is to say the client, should dictate who actually holds and executes his business.
So you're quite a firm believer in the control being with the client rather than them coming to you simply saying, I have this much to invest, you're the experts.
Yeah, exactly right. We would by far prefer to have expert investors who are on the institutional type investor, who already know about foreign exchange and have already relationships and preferences as to where their business is done.
So as someone who uses a multitude of platforms, what kind of services are you seeing that are missing at the moment, and which ones do you want to see brought in?
Well, from our point of view, it's a question that really doesn't apply, because we trade very infrequently. Other people might trade 2-3 times a minute, or 20 times a minute, or more, I'm told. We tend not to. Our average winning trade is held for very nearly 21 days, and our losing trades are held for 6 days. So we are a very infrequent trader, in addition to which we only trade once a day. That would be at approximately 1 p.m. London, because that's the time of the deepest, most liquid markets.
One of the other questions that came up was that of best execution, and apart from trying to define best execution, obviously we know that with a single dealer platform you can often get a better price than you would in a multi, but how do you prove that track record? It seems to be you either get the choice of best execution or you get the best track record of execution.
Well, Dan, that's an excellent question. That's why we put the onus back on the client and the desk that he nominates. Again, it's an argument we don't want to become involved with. If there are issues with it, it is between the client and the owner of the money and the bank that he's nominated.
Now, you mentioned in your panel session that you believe there might be too much liquidity in FX. I mean, nice problem to have, obviously, but perhaps you can expand on that a bit more.
Okay, what I meant by too much liquidity was not so much the liquidity in terms of the prices, but perhaps there are becoming too many providers, as there were at one time in the equity market. And I think there's certainly going to be some failures and some resulting consolidation, just as there is in any other industry. So in terms of liquidity, I doubt whether or not certainly the foreign exchange market could have too much liquidity per se, but there can be confusion caused by too many providers.
And I suppose this results in what people were talking about with mirage liquidity earlier in the day.
Yes, that absolutely.
What do you think needs to be done? Do we need to do anything to rein that in, or is that just simply a fact of what will happen the more people you involve?
Well, I think one of the wonderful things about the foreign exchange market has been its resilience over the years. In the early days, it was very much regarded as a professionals market. I think it still is. I think that has been able to allow the market to grow sensibly. There have been some silly things that have happened, but in the main, compared to other markets, this is a very, very grown-up market for grown-up people, and I think it can bear the stresses and strains of further evolution.
And just finally, where do you see the technology going, and where would you like to see it go?
Where do I see it going? I really have no idea. I remember way back when, again, when we used to call SID and send faxes, we thought we were just leading edge because we had a fax server that would send faxes out to the various desks in rotation. We thought that was absolutely leading edge. Where we are today is just an extraordinary thing in such a relatively short period of time. Where it will go, I don't know, but if it provides better service, better execution, better price and better results for our trading program, that can only be a good thing for investors.
Fantastic. Well, on that optimistic note, I think it's time to let you get going and get back to the networking session. Finally, if people do want to find out more, where can they go? Well,
we're on the web at www.inschinvest.com. Please speak to us if that's what you'd like to do.
Perfect. Thank you very much.
Thank you very much indeed, Dan.